Hello, traders. It's 8:01 a.m. Chicago time on Tuesday, the 20th of October, 2020. Thanks for joining me today on episode number 1862. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. We do have a pop higher in the U.S. indices versus yesterday's close. However, things are looking pretty bleak still in terms of buyers lifting. We have not pushed higher by very much from yesterday's lows, uh, given the current volatility, and it's really precarious in terms of how the indices have gained. The leader is the Russell, and it's only up 10 points or 0.63%. The Nasdaq's up 18 points, which is less than one rotation. In other words, the Nasdaq in 1 minute can take that back within the realm of a normal rotation. That represents 0.18 up percent up. The DAX is off. The DAX is weakest today, down 93.5 points or 0.73%. Gold is off as well. Gold trading at 1907.33, down $4.40 or 0.23. So I would say I would classify the overnight action as mixed to bearish, really, even though we have climbed up a bit. We did move down quite a bit yesterday. A lot of news-driven kind of flow there on the stimulus. It just seems like these politicians are playing games with the stimulus. One side says we want to do a 2.2 trillion dollar package. Then the opposite side says no, that's too much. It needs to be 1 trillion. And then the first side comes back and says we need a bigger package than what the Democrats are doing. And then the Democrats are still wanting to push their package through for a vote, but it's not going to pass Congress because it's controlled by the opposing party. And it's just a tennis game. And we expect this as traders because we're coming into an election and we know how this plays out. Note that a lot of clearing firms, especially the broker dealers, Interactive Brokers, Thinkorswim, those kinds of places where you trade stocks and futures, they are pushing margins to 100% and in some cases 150%. And this gives you an idea of the kind of volatility we're in for as we head towards election. It's really important to be well funded if you're going to trade, to keep things small and to cut your losses quickly once the market has shown that it is not participating in your direction. Really, really important to exercise discipline trading during these times. I'll go over in a minute how the rotations have really, the actual 1 minute rotation has been kind of dropping a little bit, but we seem to have a lot of extended rotations lately. I'll talk about that in a second. In terms of, we do have we did get some earnings releases this morning, and we did get IBM yesterday, and but oh, I messed up that screen. Procter and Gamble announced this morning $1.43 and 18.21 billion. Lockheed Martin also announced at $6.07 and 16.24 billion. And we're looking for Netflix, one of the Fangman stocks, after the market at cash close, expecting $2.12 and 6.38 billion in revenue. That's important to keep an eye on. And then the overnight session, PPI out of Germany came in higher than expected at 0.4 versus 0.2. And we got housing starts, building permits, this morning from the U.S. Came in slightly weaker on housing starts, slightly stronger on building permits. And building permits month on month came in pretty strong, 5.2% versus 1.8. We have Fed's quarrels at 9:50 Central, 10:50 Eastern, and Fed's Evans at 1 p.m. And then that takes us into the API crude oil stock change to wrap up the day. Let's take a look at what was expected yesterday versus what we got. Here's what was expected. It was a tough call yesterday. Let's move this. Let's expand this a little bit. Up, walk it over. That's not good. I just closed it. Give me a second. I just closed it by mistake because my fingers are all over the place here. How you guys doing? You doing good? Everybody's holding up pretty well. As you can tell, I'm buying time. Let's see. Here we go. Live broadcasts. Yesterday's video. And open. I'm just pulling it right off of YouTube. Okay. Pause. And push. Here we go. This is where we left off yesterday. I'm not going to try to do that again, but it just seems really squished. So what are we looking at? Yesterday, the primary scenario expected a drop early and a push to 96 for a sideways trade into the yesterday's point of control and balance. The secondary scenario is looking for a push of the high at 96 yet again, and then selling was looking for an impulse down and then a push to about 34.70 for a pop. Very conservative. Here's what actually happened. Okay, so here's what actually happened. There's a lot of noise here. Let's kill the noise, huh? Let's kill the noise. Boop. Things are kind of slow here with this PC. It cannot handle this broadcasting software. It just really kills it. And yep. All right. So what are we looking at here? Yesterday opens up, pushes higher into 94, could not quite get into 96, and then we get this strong rotation down. And this is what I was talking about, for the first rotation to be 25 points. We keep getting these high rotation figures just throughout. Really heavy rotations. I mean, it's hard. It's really hard to hold on to a trade when the expected rotation is around 9 points on the downside, 8 points on the upside, and it just tends to extend itself all the way down. But yesterday, despite, I know people take losses and stuff, and it's tough to say that we had really a lot of really good drop, bear flag, drop, bear flag structure. There were a lot of zippers yesterday. You can outline them all over the place. After every impulse, there were these zippers that some of them are pretty deep like this one, but there were a lot of zippers, and it gave us a lot of opportunities to lean against prior zippers for selling points. You really had to be on the ball yesterday to jump on to whatever the opportunity was. It was easy to get caught trying to find a bottom yesterday because it was moving quite a bit. It was extended quite a bit, and so the drop here to 25 gets this pretty wicked push higher back to 84, a rotation, a counter rotation that is a counter impulse, and then comes all the way back down to the IB low, and then finally breaks the IB. Not as clean as Friday's trade until we broke the IB. Once we broke the IB with this impulse down, it became easier to see a good risk reward opportunity. There's a zipper structure right here that we can lean against. So a short in the 68 with about 75 as the extended stop, but the rotations are quite wide, so we can make up for that extra risk. There's high volume nodes all throughout, a very lumpy profile, so to speak, and a lot of structure. The other thing is on a couple of occasions, we got these double bottoms, as you can see here at 58 and a quarter, 58 and a quarter, cannot take the IB. Any space within here would get us into the 83%. 83%, which applies for double IB lows or lows. Actually, lows at the day is more like 84%. Historical probability of a break of a double bottom at the day's low, 84% historical probability of that break by the end of the day. Again, past performance is not necessarily indicative of future results, but the idea is look for the short on the double bottom and look for the break and hang tight. The pullback was quite weak, and then we got more news out of Washington about the stimulus just completely falling through, and the discussions between Mnuchin and Pelosi, and the market just slams the bids and continues lower. There's an extended. This was the largest rotation down for the day, and the extended rotation down carried forward. We have a continuation, then it consolidated into the close, one more extension, but by this point, it was pretty much game over. Heavy imbalance, closing imbalance on the short side, over $1 billion, I think, and we moved the point of control to the low end of the day with basically what amounts to a trend day. So we expect the market to push lower overnight, right? So here's what we did in the overnight session. Again, we finish quite weak. And what do? We gap up and we push higher, just like we did yesterday over the weekend. Same thing. We have a point of control at the low. We have a trend day. We have a double distribution day, trend day with a point of control at the low. The expectation is that low is likely to be taken out overnight, and it's not complying with this, and it hasn't been these last couple of days, but it hasn't been also for a little bit now. It's become unreliable to count on the fact that there's a lot of volume here at the bottom, and any push below it's likely to cause a squeeze. So today you got to pay attention to this box. If the market gets below this high volume area right here, and it just poked it down at 26 even and below, this volume here is likely to instigate selling below the low. We saw this last week. I believe it was Thursday or something like that. And so the overnight session has held higher, 239,000. The volume's in line, pretty balanced. We open up, we check up, check down, consolidate, check higher, check the other side, back to the middle. We're up against the full session mid, full session VWAP currently, and we're testing from below. So today, this creates a situation where we know there's a market imbalance or there's an inventory imbalance on the long side because it's all above yesterday's close right here. And it's been balanced overnight, and it's essentially balanced between yesterday's VWAP and today's close. And yesterday's close. So we're holding in the middle here. And what that does is it creates a situation where we could tip in either direction. So both scenarios today have pretty much equal weight. Let's take a look at the order flow for a minute. The order flow, we still see these wild spikes right here as we've seen over the last couple of days. You have a wild spike up and then an ensuing drop down. We've kind of been seeing that a lot. One thing's for sure, although the volume's not that high, there is a lot of positioning going on. You know, there are a lot of icebergs in here, but you can see this is a spike down, high volume, and then shortly afterwards you have a spike up. Tough trade to hang on to anything in this kind of environment. It is still pushing from liquidity pool to liquidity pool, taking out the liquidity and then reversing. Right here we have a collision pushing through liquidity and then reversing. Not a pretty trade, especially for scalpers. It's you have to be very malleable. It could play both ways, and so that's where we stand with that. The liquidity, the order flow overnight is not so clean in my opinion. As we expand out on full depth here on this MBO feed, there's not there's not a very clear pool or location where the liquidity is very clean. So you can see it's just spiky all over the place. The actual liquidity in the market depth is relatively thin. If you look at the market depth going all the way out, even 60 ticks, it is a lot of. It's very jagged, just very jagged like this, and that creates all these crazy lines across the heat map. Not a fun looking trade at all. Let's take a look at what's expected for today. Come on. My PC is just, this laptop's just not able to keep up with all this stuff. Let me shut this down. Shutting down bookmap just to get some CPU cycles back. Okay, so what are we looking at for today? Let's turn on our levels. We are opening right in the middle of the overnight liquidity, completely imbalanced against the VWAP. My expectation on scenario one is an attempt to push upwards. One of the key stock zones today is this 34.49, expecting it to push upwards, fail, and continue with the impulse down. Looking for it to fail lower, consolidate, and push into the prior day's close and point of control at least, if not to squeeze below there. I'm looking, basically scenario one is really looking down. One thing I forgot to mention, I didn't put up the composite, but we broke the weekly. We broke the weekly one-time framing up level. And so we broke last week's low right here, this 31 and a quarter. We broke this. So now the weekly is one-time framing down. Okay, one-time framing down on the weekly. I talked about this yesterday. And we're also one-time framing down on the daily. So to me, the flow is likely to be easier and more more facilitated to the short side. This is why scenario 1 is looking for a quick test up and a move down. Scenario 2, open auction, test below, get into towards the close, consolidate, hold, push back up, and then hold steady in the range of yesterday. Essentially, a rest day. We do have a very wide range from yesterday, 34.96 to 34.11 or whatever it is, and we may stay inside of the range. The expectation is that we would take out these lows from yesterday. We did not see a very good excess low, by the way, yesterday. We see quite a quick drop off in the profile at the low, so the expectation is we would extend that low out. Okay? Look, just trade what you see. The most important part of this is to pay attention to the key areas above and below. Those are outlined in gray. For me, the 34.49 above there, the single print at 56 above there. We have the 62, which is a multiple confluence level. Okay, multiple confluences at the 62. So for me, 62, 56, 49, and then below, and then also we got the 31.25. Remember, that's the weekly low. 31.25, and then below there's a thick area. This 34.21 or 20 half. Really, this area is also key. As you can tell, it's quite wide. If it cannot hold any of these, then we are likely to turn over and move towards 34.04 again. 34.04, 34.05, which is right here. So this is 04.05. How it gets there, what path it follows, who the hell knows. But at least there's a plan. If it tests up and fails to continue, I know I'm likely to get an impulse down. I'm likely to get a lot of volume kicking in from the overnight point of control in the volume area overnight. That volume has as many buyers as it does sellers, and it's likely to squeeze some people out. So I'm looking to hold that through the 31.25 break, look for 20 half, and then potentially yesterday's low at 34.13, I believe it was. Let me see, what was yesterday's low? 34.10.75. And if it breaks the 34.10.75, then hold for 04.05. That's what we're looking for. That's the plan, not the lines, but the lines are just a path in the process of the auction discovering itself. Good luck, and I'll catch you tomorrow. Take care.